Hello and welcome back. In the last lecture, we saw that there are 5 dimensions to a business environment. So those are economic, social, political, legal, and technological. In this video, we will talk about economic environment in detail. Imagine that you are a company located in India and you want to invest your business somewhere else in abroad. Let's say you have 5 factories in India. Now you need to expand your business internationally. So you are planning to invest in a foreign country. You are looking for a suitable foreign location. Which country could it be? If you are going to enter into a country, don't you think the economical climate of that country should be in healthy position? People should be willing to buy your products in the country that you are planning to invest. Let's say if people are very welcoming and people have the money and people are already kind of rich, then it is easy for you to open a business. What if the country itself where that you are going to invest has a lot of economical problems? The government is not having good economic policy decisions. Inflation is so high in that country. There is not much of financial security, not much of checks and balances. Then you will hesitate to open your factory in that country because it is going to add only to your headache. Businesses from foreign countries, when they are planning to come into our country, or if you are in this country and you plan to open a new business in your country itself, let's say that's your first business, how is the economic environment? That's the first thing you have to see. So the first point that you have to understand while interpreting the economic environment, while assessing the health of economic environment, you have to see what type of economy is being followed in that country. Based on that, the larger 2 types of economies are capitalist type of economies and socialist type of economies. You must have already have some preliminary idea about these 2 types of economies, but in case you don't do, I will explain now. Capitalist type of economies are those economies that encourages entrepreneurship, that encourages businesses. What is capital? Capital is something the owner puts as a capital into his or her business. So it encourages capitals, more and more capital to be put in more and more businesses. So that is capitalist type of economy, which means businesses are encouraged, entrepreneurships are completely encouraged. I just said capitalist economies are friendly towards entrepreneurship. That does not mean that socialist economies completely discourage entrepreneurship or completely discourage businesses. Only that it focuses more on its people. It says that government will control a lot of things, including businesses. In capitalist economies, in free market, I just have written in the second line, free market versus governmental type of economies. In free market, government just does governing activities like law and order and defense, border security, and then basic privileges for the citizens. So government's scope of responsibility is limited towards governance. The business aspect is almost completely privatized and it is given to the hands of the entrepreneurs. That's how capitalist economies work. The socialist type of economies, government thinks that government is the head of everything. So even the businesses will be reporting to the government. So government will be controlling businesses to a larger extent than how it is done in capitalist economies. I will give you examples, then it will be even clear. US, Canada, Australia, these are all economies. They are predominantly capitalist nature. The best example is US. Another good example is South Korea. So these type of economies have lots of businesses. You can see a lot of brand names, particularly from South Korea. You have Samsung, Hyundai, LG. These are all the brands that came from South Korea because entrepreneurship is actively encouraged. The examples of socialist economies are you have China, North Korea, and then you have Russia. Russia is a very good example. Businesses exist in Russia, but everything is under the Russian government. Again, in China, there are businesses, but again, who is the ultimate boss? Government is the ultimate boss. So that's how socialist economy and capitalist economy works. If you are a particular budding entrepreneur, you want to set up a factory in a particular type of environment, you decide which one will be easier for you. Is it easier for you as a businessman to do business in a capitalist economic country or in a socialist economic country? So that's the first point. The second point I want you to understand is also while assessing the economic environment, you need to consider the 2 main factors that will affect any economy. One is the central bank's interest rates. In India, it is Reserve Bank. The Reserve Bank's interest rate and also the Finance Ministry's tax rate on its citizens. So interest rates and tax rates will decide the quality of the economy and also where the economy is headed. Now at this moment, you have to understand 2 more words: economy in a boom period and economy in a recession period. So what is a boom and what is a recession? Boom is any situation where people are so welcoming to spend their money and buy things or enjoy services. People are basically willing to spend money. Money is put into the market and not preserved inside the pocket of the citizen. Recession is exactly opposite of that. People are not willing to throw their money away. People are not willing to buy. People are not willing to have new experiences. People are only focused on saving their money. Everything will be dull in the recession type of economy. Now, which will lead to boom and which will lead to recession is what we are going to see up next. Now, let us say, what is this interest rate? Recently, the latest news is RBI has reduced its interest rate by 50 basis points. You can see the list of news here. It has been covered by almost every newspaper. Repo rate has been reduced by 50 basis points. That is, previously the rate was 6%. Now the revised rate is 5.5%. What does it mean? It means that banks should reduce their lending interest rate. That is, let's say you are a common public and you want to get a loan from business, either it is housing loan or it is a business loan or a personal loan, any loan, banks should charge less interest rate on your loan. Isn't it a favorable move? Yes, if you are a borrower, it is a welcoming move for you, because let's say previously a housing loan was 8%, you might get a housing loan now at 7.5%. Again, if you just compare 8% with 7.5%, it might not seem like a big difference for you, but let's say you are buying a house for 3 crores and you are getting a loan for 2 crores. Imagine what will be the amount of 7% on 2 crores and 6.5% on 2 crores. Huge difference, isn't it? So people who are willing to buy houses are now will be encouraged to immediately borrow because the rate has reduced. Now, what is the contrast of this? What is the counter move of this? Because banks are going to charge less interest on your loan. If you are going to invest your fixed deposit into bank, let's say you invest your money in bank and get a fixed deposit, bank will also pay you less. So previously banks were, let's say, paying 6.5% on a fixed deposit. Now banks, because their lending rate is reduced, their borrowing rate also will be reduced. So previously you were getting a 6.5% of interest on your FD. Now you might get only 6 or even 5.75% on your FD. So that's the other side of the picture. Because of this, what will happen? FD rates have reduced and loan rates have reduced. So because the loan rates have reduced, people will borrow money and more people will come into business. They can get business loans much faster at a lower rate. Because housing loan rate has reduced, people will borrow more and buy more house. If people are willing to buy more houses, don't you think that will incentivize the developers and real estate companies to make and build more houses? So again, if more and more houses are getting built, more and more workers will be employed in real estate construction. That means more and more people will get job. So you see the second order, third order, fourth order consequences of just one rate decrease by the RBI. Now let's say, what is the other side of the picture? Because of the FD rate being reduced by 0.5%, people will save less in FD. Banks will also get less money. Let's say banks are giving 6.5, 100 people will put FD, open FD. Now, if banks FD rate has come to 6%, out of that 100, 40, 50 people will only invest in FD now. The other 50, 60 people will find new other ways to save money, or they will decide to not save money at all. They might decide to spend the money. So that's how one rate decrease will have multiple ripple effect. It will have a lot of other second order, third order consequences. Now let's say instead of bank decreasing the rate, what if the bank increases the rate? If bank increases the rate, then again lending will become costly. So you are getting housing loan at 8%, suddenly it will become 9%. Then people will buy less and less loan. People will start less and less businesses. People will buy less and less houses. That means real estate business will get affected. Less and less buildings will be built, so less and less number of people will be employed. So the consequence again goes like this. That means there will be unemployment situation. More number of people opening business is always good for a country, because when business is getting opened, when buildings get built, it gives employment for the people. When unemployment decreases, crime rate also decreases. You see where I'm going? So this is exactly what a small thing will have big level of consequences. Now let's also see the same thing from tax rates perspective. Let's say government raises income tax rates. What will happen? People will be left with less and less money. Let's say with the current level of income tax rate, I have to pay 40,000 rupees tax to the government. But government has increased the tax rate. Because of that, I have to pay now 60,000 as income tax to the government. I am left with 20,000 less money. I will also try to save more of whatever the money that I have. So what will I do? I will not even spend the other money, because I think that I already paid extra 20,000 to the government in the form of tax. At least let me save the other amount of cash that whatever I have. So what will I do? I will try to naturally preserve the money that I have. When I talk about tax rate, it's not just the income tax rate. It is also about the indirect tax rate, which is GST rate. When the government raises tax rates, the products and services costs will go up. Then what will happen? Inflation will increase. Then what will happen? If the inflation increases, people will find it hard and hard to buy and consume and enjoy services. People will go less on trips. So tourism will get affected. People who run cab business, airlines, railway, everything will get affected. It will lead to a recession situation. But what is the other side of the picture? If government raises more tax, both from income tax route and from indirect tax route, government will have more money in its hands. If government has more money in its hands, at least it can invest that in some public project. It can construct a dam, it can construct a bridge, it can construct more schools, it can construct more hospitals. So that is the positive side of it. Let's say government reduces tax rates, then I will have more income with me, which means previously I was paying 50,000 income tax to the government, now I'm paying only 30,000 income tax to the government. So I have extra 20,000 with me. Most likely people, let's say they have made some savings, cost savings from tax, they will not try to save this money. They will think that, okay, now this 20,000 is free for me, let me as well spend it. I might buy a great shoe, I might book a trip to some tourist location, or I might watch a cinema, or I will put that money in index funds or mutual funds somewhere else. I'll buy stock. Anyway, I'll not try to keep that money with me. I'll try to put that money back into market. Like me, if a lot of people decide not to keep the money with themselves and put that money back into circulation, into the market thrives. So that will lead to boom situation. Economy overall, it grows. Now, because of the last 10 years, particularly the ease of doing business has increased in India, a lot of foreign investments are coming into India. I have also given an example of Apple factory coming into India. We should also see it will only lead to more and more multinational companies setting up their factory in India because, again, the economic environment is good. Why do you think Apple would switch their production from China into India? Because the ease of doing business is better in India than in China. That's what I've read in the news. So that is the economic environment. You have to see whether the economy is in boom or is in recession. You might also have heard the news about Sri Lanka, isn't it? The bankruptcy of the country itself, which means they have more liability than more income they can generate, the more assets that they have. The whole country itself is kind of in a bankrupt situation, which means inflation is extremely high, its currency power is extremely low. So these are the examples of some troubled economies. Now, in this climate, if you are a businessman, you would think twice, or you will almost decide not to open a factory in Sri Lanka because the economy is not that great. So that is this lecture, the economic environment. I hope you understood this dimension of economical aspect of assessing a business environment. In the next lecture, we will talk about the social aspect of business environment. Thank you.